Hey guys, Bryan Buhr with Berkshire Hathaway, and this month's buyer tip, I actually just wanted to break down the difference between an FHA and then a 5% down conventional loan. So these are two of the most common types of loans, especially for first-time home buyers. And so for our example today, we're going to do a $271,000 purchase price, a buyer with above average credit, and then we'll kind of talk about how that affects a few of these things. So long story short, the FHA interest rate is actually usually a little bit lower than conventional, basically just because it's a loan that's backed by the government, and the government kind of makes some guarantees to lenders that wouldn't be in a conventional. The other big difference though is going to be the mortgage insurance, and not only in the price, but how long it stays on. So this mortgage insurance is wrapped into your payment, and with the FHA loan, it doesn't go away. So even once you have 20% equity in your property, you are still paying that mortgage insurance premium unless you were to refinance out of your loan. Where the conventional, as you have more and more equity in your house, this number will drop every year until eventually it'll disappear on its own once you have 22% equity in your property. The other big difference is going to be the funding fee. So this FHA loan does have a $4,500, in this case, upfront funding fee that a conventional loan doesn't have. Closing costs for the FHA loan are a little higher as well, just because government loan, you know, the government's going to kind of nickel and dime you a little bit more than what a regular lender would do. Escrow is about the same, and the other big difference is going to be your cash to close. So obviously with a higher down payment, it's going to require more money up front. So that is one of the benefits of the FHA loan. Once you break everything down, your monthly payment for a $270,000 purchase, your FHA, you can expect a payment a little over $1,900. With a conventional, it's a little lower, basically because you have more equity. So people ask, why would I ever do an FHA loan if I can do a 5% conventional? I mean, the conventional is going to have this lower monthly payment. This $80 a month is going to make up for this cash to close relatively quick. Why would we ever go FHA? Well, there's some situations. So FHA does allow you to have a higher debt to income ratio. So if you're someone that maybe makes good money, but a lot of your money doesn't show up as far as tax purposes, this might be the only way to get you to qualify for the house that you want. The other big thing is this mortgage insurance. So in our example here, we have someone with above average credit. Your mortgage insurance with an FHA loan is going to be the same no matter if you're barely qualifying for the loan or have a really good credit score. It is going to be exactly the same based on the sale price. Where the conventional, this mortgage insurance is going to adjust with the borrower. So if you have good credit, this number could actually go down even more. If you have bad credit, it could go up even higher than what the FHA loan would be. So long story short, FHA is a good program. So say you have husband and wife co-borrowers, and one just recently switched jobs, where you're going to need that higher debt to income to maybe qualify for the house that you want. Even though you can easily cover the payment, if you've just switched jobs, some of that income might not count. So I would say if you can easily do this 5% conventional loan, that's the way to go. However, if your only option is renting or getting the FHA loan, depending on your situation, I might suggest getting this FHA loan, because renting, that's money that you're just throwing away. So hopefully this breakdown helps. If you have any specific questions about loans, properties in the area, feel free to give me a call. My number is 218-850-2004. Thanks.